Welcome back. Taking a look at markets. Futures are moving to the upside. 229-point loss on the Dow futures after a volatile week that included the 30-year Treasury falling to a record low below 2%, back above that level right now. The 10-year, again, that yield fell below the 2-year Treasury. It hit a 3-year low on the 10-year yesterday. What to make of all of this? Joining me now, Mahoney Asset Management CEO Ken Mahoney. The Wall Street Journal writing, Ken, that there is a group of people who think that this rush to bonds, rush to Treasuries is overdone. I
think so. I mean, if you look at the chart, let's say, of some of your ETFs like IEF, TLT, if you look at those charts, they're parabolic. They look like something out of 1999 internet stocks. I mean, treasuries are not supposed to go like that. So I think it is overdone. There's been this flight to safety, and I wouldn't be surprised if we unwind that move a little bit, right? You get these big pension companies that want to go and reallocate. Bonds get stretched this way, stocks get stretched this way. It really makes it for a strong case to reallocate or rebalance.
Like USTreasury.com, though, that's a good thing. Maybe the government should start slapping .com on that. I'm just kidding.
Yeah.
But to what extent do you feel like this push and pull? We've been talking about these pressures and the roller coaster all week, right?
Yeah.
Okay, the U.S. economy seems in pretty good stead, but what if China and therefore Asia are weak? What if Europe is weak? Then can we afford to be relaxed here? Can investors still put money to work?
Well, I tell you, when you look at the last few weeks, it really reminds me of the old Wall Street saying, markets go up by way of escalator, and when they come down by way of elevator, like do-do-do-do-do. So the escalator ride, June, July, we're setting records. People should be taking some profits there because we know we're going to get the elevator ride. We don't know what's going to cause it, the Fed or China and so forth. So now that we have this elevator ride that started last Monday, here we are. So, I mean, you really have to kind of start picking your points. When you look at it, by the way, we're about 6.5% off the highs. I mean, people are running around like we're down 30% or something. There's all this kind of angst about it.
But do you have confidence? Let's just say the U.S. economy is the only one worth investing in right this second.
Mm-hmm.
Does that make you feel good, or does that scare you as a thesis?
Well, I think more money flows in. I mean, the way we're looking at it, we've seen this as a buying opportunity. Again, maybe not this level. I wouldn't be buying the futures up 229 this morning. But certainly, look, last Monday, we were down 767 points. Meltdown Monday, and then we had a turnaround Tuesday, Wicked Wednesday, so forth and so on. But when you have that big, drop like that, it takes some time to overcome. You've done a lot of technical damage there. So the confidence is not there until we start making
you said you're buying. What are you buying?
So, again, the playbook that we like to use is right in front of us. Those who reported, who beat estimates, who guided forward, companies like Microsoft who beat estimates and guided, had better guidance, those are the type of names we look at. We also like technology, XLK, a nice basket of technology stocks. Again, incrementally buying.
But technology, more than the broad S&P, has more exposure to their revenue from overseas.
Sure.
More than 55% of the revenue for the tech stocks in the S&P 500 comes from overseas. So if the rest of the world looks lousy, these stocks eventually will look lousy too.
They could, but we're kind of betting that people, investors, are looking more towards growth than value. I mean, value's been a value trap. You look at these companies that are trading at 12 PEs and they look cheap. Next thing, they're trading at 10 PEs. We'd rather go where the pin action is and stick with large cap growth.
Ken, good to see you. Ken Mahoney. Have a great weekend.